Hi Anton, and thanks for joining us today for a market update. Now, the Australian share market has been trading at close to 5-year highs and continues to show strength. Maybe you could just let us know what some of your reasons are for this.
Yeah, look, there's a few reasons why it's done well. There's a bit more optimism, I think. Some of the stats out of Europe are showing a stabilisation. The US continues to grow slowly, and there's been some better signs out of China in the last few months. On top of that, obviously, I think there's a bit of optimism on the election on the weekend. So all that put together, plus an okay reporting season, interest rates remain low, which has helped the market reach close to 5-year highs.
Now, there was a trend in this year's reporting season, Anton, whereby companies' dividends per share seem to outstrip their earnings per share growth. Maybe you could talk about some of the reasons behind this.
Yeah, well, the reporting season was interesting from that point of view because the earnings really came more or less in line with most people's expectations. Quite a dull reporting season actually, no major shocks. But I think the surprise was the dividends, and we saw dividends or capital returns, and that's been a trend over the last few months. Westpac paid a special 10-cent dividend. Woodside decided to pay 80% payout of their dividends. Wesfarmers is paying out a 50-cent capital return. And I think what we're seeing is obviously in a low growth world, companies' balance sheets are in good shape. They don't really need the capital. There's overcapacity in most industries. And what companies are doing is rewarding shareholders and paying them back capital and special dividends, really to get that the excess capital into the hands of shareholders. On top of that, interest rates are very low. So in a sense, it's companies can have a little bit more debt. Most companies have rolled their debt out significantly, many years. Hence, companies are reasonably comfortable to pay out a bit extra in dividends and capital returns.
And Anton, you've mentioned that there's an election result imminent. I'm just wondering what you see as being the impact of this on the markets in the short term and maybe the longer term as well.
Look, it's an important election. I think it's in the middle of a world where things are obviously still fairly fluid. I believe that the Australian share market's already factoring in potentially a change of government. Clearly, overall the political scene in Australia has been pretty uncertain. Policy's been not very consistent or very helpful to many businesses. So I believe that that's been factored in. That's one of the reasons why the Australian market has held up quite well while other markets around the world have corrected. So that's factored in. So I think, in the short term, it's a boost of confidence in terms of hopefully getting more rational policies. But I think, medium to longer term, obviously the global issues of what's happening in the larger economies of the US and China will continue to have a major influence on our market. And from that point of view, really the uncertainty continues. No one's really, there's no definitive map of where the world will be in the next couple of years. So, from that point of view, nothing's changed. But I think having a more stable government in Australia with more rational economic policies will definitely be a plus. And hopefully we will get that.
And just finally, Anton, this year represents IML's 15-year anniversary. I'm just wondering if you could quickly reflect on some of the lessons you've learnt over the years and how this has impacted IML's philosophy and investment style.
Yeah, look, incredible 15 years. I guess you set these things up and you sort of hope you'll do reasonably well, and here we are 15 years later, still sort of doing reasonably well. So, look, I think that the message is we've always had a very core value investment philosophy, which we've stuck to religiously over the last 15 years. The people have changed from time to time, the ratings have changed from time to time, but I think people really understand what they're getting with an IML portfolio, which is a very strong focus on what companies do, on their quality, on their value, what their share price, and really trying to put together a lower risk portfolio where clients can be very comfortable in terms of, there's no major surprises. Of course, our funds will go up and down with the market in terms of returns, but I think in terms of volatility, in terms of, people will always understand what they get. They've understood I've been here 15 years. Hopefully in 15 years' time, I may or may not be here, but, people will hopefully will always understand what they get when they buy an IML portfolio.
Okay, thanks Anton for providing your thoughts today and these insights into the market.
Thanks.
Thank you.